Howdy, Jacob here. Today we'll be looking at company 24 in our dividend yield screener, and today's company is Chord Energy Corporation, ticker symbol CHRD. All right, so first thing 6.6 market cap, 6.8 enterprise value, so pretty low net debt. That software thing is wrong. It's a company that acquires, exploits, develops, and explores crude oil, natural gas, and natural gas liquids in the United States area. Um, so initially, 6P looks cheap from that perspective. 7.33% dividend yield. I gotta say, this is crazy. So right in October, when in 2020 it hit its low of 11 cents. Just over 3 years later is now $162. So 1,000x in 3 years. That is just absolutely insane. Um, so let's look at some more numbers here. So okay, so 2021 to today, over $1 billion in free cash flow. Looks like they make some acquisitions, invest a little bit in themselves, cash paid for dividends. Bought back shares a little bit more recently, but um, let's see. The dividend pays out 655 million, 549 million. If you just look at the last year, they could easily afford that. But if you look at a little bit before then, um, doesn't look like it might be the most. This would definitely be a business that I'd have to look into to see if that dividend is reliable or not, or whether it's gonna get cut in half, cut in full, so they can uh, keep more money on hand. But not a whole lot of debt, which is good to see. I mean, 394 million in comparison to they made 900 million in free cash flow last year. So I think we can start making some assumptions here. So I I feel like the huge increase could be a little bit due to acquisitions, but mostly due to just the price of oil and gas increasing by so much. So I might do 0 and just because I mean I just don't know enough about this. So when I look at this, it goes from 2.3 billion to 1.9 to 1.0 to 1.5 to 3.6. I mean, I just don't know enough about it to be certain that it's going to stick. Um, all the earnings and cash flow are going to stick that they have recently. So I mean, here I'll just do all over the place to see what it looks like, but maybe like 15, 25. That seems too high too for because it's been so high recently. I don't think I can keep it. So all right, share change. Damn, so many. That's weird that shares have increased by so much. When they're making more money, they're issuing more shares. That seems like a whack management thing to do, but um, I have no idea. Maybe 5% increase because they were pretty consistent for a little bit and then jumped up 50% from 21 to 22. So that's odd. Um, yeah. So again, initially looks, and then this is assuming that they keep their dividend the same. Um, but I mean, yeah, it's definitely there's so much change. And when I do my first look, obviously I'm looking at just historical data. And when I look at this historical data, I'm like, I don't know what's going on. Minus 70% revenue, minus 43, plus 45, plus 130%. I mean, this is definitely a business I want to understand before I even thought about putting money into it. Um, but I mean, this P looks cheap, but again, with how quickly it's increased very recently. I'm talking about the earnings and cash flow, then I just don't know how sustainable that is. So definitely a company I do a lot of research, even if it got close to this 81%, $81, just to better understand how this business operates and what makes sense and what I think is going to happen more reliably into the future. So thank you and have a good rest of your day.